What's up, everyone? It's Scotty with Money Investing. Welcome on board for yet another Market Open live stream. We're early today because we've got the big numbers, inflation numbers coming out in about 20 minutes. So at 8:30 a.m. Eastern, we're gonna learn about the June's CPI reading. And that obviously is going to be the biggest catalyst to move the markets. That's going to really change the direction for interest rates from the Fed. And there's a lot of excitement, a lot of confusion because we got a fake CPI report yesterday floating around on Twitter that was suggesting a 10.2% gain in June. That would have been brutal if that was real. But today, in about 20 minutes, the big numbers are due. So I'm going to be playing the CNBC here just so that we can hear that. So give me a thumbs up if you guys can see that and hear it. And just want to make sure, and then we'll go back to kind of prepare for what inflation numbers could look like. We'll take a look at our spreadsheet. We'll talk about the historical CPI numbers, month-over-month changes. So let me know if you guys can hear that. I'll play this, and then I'll also bring up the screen. So just give me a thumbs up if you guys can see it and hear it.
Waiting for the big reveal, America's top state for business 2022, and joining us live from a mystery location, CNBC special correspondent Scott Cohn. Lots of guesses coming in from all parts of the country and the globe. Give it to us, sir.
The mystery will be a mystery for not too much longer, Andrew. We go through all 50 states, 88 metrics in stories of competitiveness.
So perfect. Great. So that's good to hear. And we are all set. So if you guys can hear that loud and clear, that's great. I turned down the volume a little bit so that it wasn't too loud, but I just wanted to make sure that it's clear and you guys can see the screen as well. So we've got about 18 minutes or so for the CPI numbers to come out, but QQQ right now is slightly up 41 basis points. Monday and Tuesday, we've seen nothing but red. Monday, the markets were down over 2.2%, especially the NASDAQ. And yesterday, we were down close to 1%. Pre-market right now, we're pushing higher, 41 basis points. But it's really going to be interesting. It's really going to be interesting for us to see where inflation ends up. This guy goes out to the beach to talk about inflation. So he wasn't talking about inflation. That was something else. I just wanted to bring it up to make sure that you guys can hear that and see that as well. So SPY up a little bit over 34 basis points, and the 10-year yields are dropping a little bit over 0.5%. Now, what's interesting is the actual target rate probabilities for the July 27 meeting from the Fed. We talked about this last week, and there was a 98% probability that we're going to see a 75 basis point hike. Then that number went down to 93%. And now it's coming down even further. It's now sitting at 85.8% this morning when I checked. It's sitting at these levels, and the probability for us to see a 1% increase has actually gone up. So it's now sitting at 14.2% because the current range is between 150 to 175 basis points. A full 1 percentage point increase would be 250 to 275 basis point. And this number, obviously, it's been shifting a little bit. And, that obviously depends on where inflation ends up coming in, right? If it's too hot, too accelerated, then unfortunately we might see a little bit of a pull down on this. And the probability for us to see a full 1% percentage hike will go up. And then, of course, if inflation comes in with the expectations, if it comes in a little bit lower, if it gives us some good surprises, then the probability is, of course, 75 basis points or lower for interest rate hikes going into the July meeting. So in other news, I was also talking about this in our Discord, but this right here is the entire document in the Court of Chancery of the state of Delaware, where Twitter has filed a lawsuit against Elon Musk and enforcing him to fulfill the deal that he agreed to buy Twitter at about a $44 billion valuation or $54.20 per share. This right here is the entire complaint. This is a pretty long document, so these are usually how these are structured, so very, very long document. There's also tweets, screenshots of specific tweets that he has, that Twitter has basically mentioned. So there's a lot of tweets that they have talked about in this complaint, but I've only gotten through like half of this, so I still have to spend some time to kind of read through this before I can, share my views and share my thoughts. But it is brutal. I mean, if you take a look at what they just say over here, let me see. So right here, they say in April of 2022, Elon Musk entered into a binding merger agreement with Twitter, promising to use his best efforts to get the deal done. Now, less than 3 months later, Musk refuses to honor his obligations to Twitter and its stockholders because the deal he signed no longer serves his personal interests. Having mounted a public spectacle to put Twitter in play and having proposed and then signed a seller-friendly merger agreement, Musk apparently believes that he, unlike every other party subject to delaware court law, is free to change his mind, to trash the company, disrupt its operation, destroy stockholder value, and walk away. So again, there's a lot of obviously brutal stuff in this complaint. So that will leave for a separate video and for another time. But today's focus, and right now, we're simply focusing on inflation and the CPI numbers that are going to be very, very important. So let's just start a poll for inflation, so CPI today. And I'm going to do above 8 point, let's just see. I'm going to actually do some simple numbers, right? So I'm going to do, kind of it's difficult because I want to see the month over month expectations from you guys. So I want you to actually tell me what month over month changes you expect or the year over year as well. So let's just take a look at CPI today. 8.6, so unchanged. 8.7, and then I'm going to add a few more options. 8.8, and above 9%. So we're going to do 8.9, or let me just do this. Let me just do 8.6, so unchanged. Then we'll do less than 8.6%, and then specific to 8.8 to 9%, or more than 9%. Okay, so all I'm asking is CPI today, and you gotta answer whether it's gonna be 8.6 on a year-over-year basis, so unchanged, or less than 8.6, or between 8.6 and 9%, or above 9%. So those are gonna be the polls available for everybody to answer. So again, we've got about 12 minutes left, and the poll just went out, and let me know what your thoughts are on inflation overall. The report that we're about to get here in about 12 minutes. So it's hard to tell. Yep, so I agree. I think it is difficult to predict, but CPI numbers are like Xmas. 13 minutes, CPI should come out in 12 minutes. Yep, so we were just waiting 12 minutes. I'll pull up the report. We've got the BLS open right here. And then we'll quickly go through the actual report. And this is the entire spreadsheet that we're tracking for inflation. So again, some of the individual line items that we are going to be focusing on. This I'll just leave that for a separate video because I feel like it's going to be very boring to look at a lot of these individual stuff. But some of the things that we talked about in my yesterday's video for inflation. Cereals and bakery products and rice, those things were obviously pushing higher. Cupcakes and cookies and cakes and all that stuff. Meats, poultry, eggs, fish, those things on a month-over-month basis. Frankfurters, meats, lunch meats, poultry, chicken. Some of those, everything that's in red has gone up a lot month-over-month. So you'll notice that it's gone up like 1, 2, 3% on a month-over-month basis. And everything that's green, which is very few, has actually shown signs of improvement in the overall inflation report. Again, this is for the month of May. That came out in June, and the one that we're about to get today will be for the month of June. So for previous month. So yeah, so inflation fixings estimate 8.9%. So yep, so we covered that in one of our videos. So let's take a look. So CPI again. 58%. So more than half of you expect inflation to be somewhere between 8.6 and 9%. 20% of you actually expect inflation is going to be coming down below 8.6%, and 16% expecting inflation to be above 9%. I'm going to go with a little bit with the inflation fixings because they have been accurate, and 8.9% is their estimate, so I would have to go with the consensus here. 59% expecting 8.6 to 9%. I think that's a very reasonable outcome from the inflation numbers, unless of course, so anything out of that range is a big surprise. right? Anything out of that range, if it's below 8.6 or above 9%, would be a big surprise for the markets. Anything in between that range is something that I think markets priced in to some degree. So, yeah, inflation fixings 8.9%, and then for the next 3 months, which is going to be July, August, and September, they're still pricing in inflation to stay above 8%, and then starting October is the timeline that they're forecasting when inflation starts to peak and come down moving forward, and they're also expecting inflation to come down to 3.5% in May of 23. So it's like we go up, we stay at these levels for a few months, and then start coming down, and then immediately pull back down in May of 23. At least that's what the inflation fixings are pricing in. I read another report today from Kathy Wood and ARK Invest, and she says deflation is a much bigger issue than inflation right now, and there's going to be a few months until these inventories resolve to lower prices, and she believes that, again, the Fed is making a huge mistake by raising rates too aggressively, and inflation will come down, according to her, over the coming months. So that's where we are. A lot of different angles and perspectives on inflation. Inflation is one of the things that the market is focused on, is also very confused at the same time because there's so many different perspectives on where prices are going overall moving forward. So would be interesting to see something above 9%. It would be, Robinson. That would be like absolutely crazy if you do get up to over 9% in inflation. So Alex making the wildest prediction as always. Inflation at 19.4% and NASDAQ down 19.4% today. The markets will just be closed after a 7-8% drop, if that ever happens. Like, it's happened in the past, right? So the market will just go into a halt, it'll go into another halt, and then it'll just be suspended for the day. So no more trading. So Kathy, back to being saying inflation being transitory. So, I mean, she talked about, we've been covering what she has to say. Like, we've been talking about her perspective and her views on the markets and the economy for a long time, right? Well over a year. And June was supposed to be the month where she said in her previous In the Know video, she said that June was going to be the month where we see inflation kind of peaking and interest rates also going up, and then after June is when the pivot will start, right? Pivot will happen from the Fed, but right now it's still pretty clear from the market standpoint that the Fed is still going to go ahead and raise rates by 50 to 75 basis points. That's still pretty aggressive from the monetary policy standpoint. So now, of course, she's pushed out a couple more months, saying that the Fed will eventually reverse on policy, and there's going to be a bigger issue related to deflation in the future. So, we'll see if that actually does happen or not. I feel like she definitely has a view, a very unique perspective on the markets. It's too early for us to rule her out because the last thing I think we can do is give her the time, right? So obviously, I know there's a lot of critics of Kathy Wood and ARK Invest, and people just seem to not like her strategy or philosophy, but it's not for the average investor anyway, right? It's only for people who are looking for exposure in innovation, have a much higher risk appetite, risk exposure, right? Even though it's not for me, it can be for the right type of investors, right? So I think if her strategy allows us for a 5-year time horizon, we'll see what happens 5 years from now, okay? So I think that's just all it is. So Yeah. Oscar says, don't forget Kramer said today is the bottom of the market. Did he say that? I think, no, I thought I shared something in our Discord the other day, Oscar, where Kramer said the bottom is nowhere near close. I think it was something like that is what he said. And then I also mentioned that this might be the bottom, considering that Kramer is calling for a no bottom on the market. So I think he did mention that. Might be different today. You never know with Kramer, right? So he might be saying that today the market is at a bottom. So we'll see. Tesla back above 700, so that's great. But again, all that matters is going to be that print, that headline print, and that month-over-month print from CPI. And that immediately we may see these numbers kind of pivot from 85% that we're seeing right now over to maybe 1 percentage point, or this number starts to go higher for a full 75 basis point, pretty much confirmed. So we'll see what happens. Okay, so he did say it. Kramer said that today is the bottom. Wow. Okay. Wow. God damn it. You just can't catch a break. So we are in deep. Yeah, it's gonna be interesting. Okay, 100% he said today is the bottom. That's interesting. So yes, 5 minutes left, less than 5 minutes left for the inflation numbers to come out. So what we're gonna do is, we've got the QQQ ETF over here. I've got the SPY at the bottom right. And so what we're gonna do is we're gonna just switch over like that, and I'll bring up the screen. So we'll listen in and we'll see, and then once the report is over, then we'll switch over to the actual PDF, and then we'll analyze it for ourselves, and then take a look at the yields. The 10-year yields are going to be over here. They're also very, very important. The 10-year yields at the bottom left here. And then, of course, we got the SPY and the QQQ to see how they're moving. So far, we are up. So, on the day so far, QQQ is up 61 basis points, and the SPY is up 0.5%. So, all right, the polls, 56% expecting inflation to be between 8.6 and 9% on a year-over-year basis. 17% still very aggressive with more than 9% for the CPI read. And 19% expecting inflation to be below 8.6%. So it's going to be very interesting. It really is exciting, isn't it? So let's see what they have to say here.
Not the big number. June CPI, it is now just minutes away. The number, the market reaction, all of it in just moments when Squawk returns.
Yes, so make sure you guys drop a like. I would really appreciate that. It pushes the stream out to more people. So it's a single tap of the button. Make sure that you like, and also subscribe if you haven't already. Yes, I turned down the volume a little bit. I just want to make sure that it's not too loud. So I'll definitely, okay, so that was loud. I'll turn it down a little bit. Come on, we can't miss anything about the inflation numbers. It's okay if it's loud. I'm just kidding. I don't want to make it too loud. So I'll just reduce the volume slightly next time it's on. So we got 2.5 minutes, about 2 minutes for the CPI numbers. And again, QQQ, SPY, and the 10-year yields, those three very, very important. The Dow is going to be the top left, but I've got this screen up there, so you may or may not be able to see that. And then, of course, individual stocks, we'll quickly check up on those as well. Amazon is at the top right, Tesla is at the bottom right, Nvidia is over here. And then, of course, we've got Apple on this chart right next to my face. And we'll keep a close eye on volatility too. VIX is slightly down about 0.5% right now, so 27. Yesterday it was down, then it got bought up once again, so it was pushing higher, so back about 4% in the green. So we'll keep a close eye on the VIX, and we'll see if it bounces off of these levels after the inflation numbers come out. So, 1:30. Exciting times. I love when inflation numbers are coming out, because it creates this excitement about what those numbers are going to be. Every time inflation, PPI, unemployment, or Jerome Powell is speaking, like some of those, it definitely creates for a more exciting stream, because the markets are more volatile, they're moving more. So, and yes, make sure that you drop a like. Oscar, thank you so much for reminding everybody. I'm going to end the poll there. And we'll wait another minute. So now I'm gonna shut up, and I'll just bring up this so that as soon as they come back from the commercial, we are good to go.
Welcome back to Squawk Box on CNBC. We're just seconds away from June CPI inflation data. Take a look at the Dow, about 123 points higher. NASDAQ up about 70 points. The S&P 500 up about 19 points. Let's get straight over to Rick Santelli. He's standing by at the CME in Chicago. Rick, you got about 10 seconds before those numbers hit.
Yes, no, and it's obviously it's going to be not only exciting, but it's going to be very important for the direction ultimately of today and for the rest of the year of interest rates. And it is out. Headline CPI much hotter than expected, up 1.3%, up 1.3%. In order to find a higher month-over-month level, we're going back to the same year as the up 1.2 in March was the previous high of this move, and that's 2005. If you strip out the all-important food and energy, and the Fed's much more reluctant to do that these days, it's also hotter, up 0.7%. The high watermark there was all the way back in April of last year when it was up 0.9, and that was 1981 level. 0.7, well, 0.7 is the smallest number since then. And if we look at year over year, this is really hot, up 9.1%, well above the 8.8 we were expecting, and 9.1% puts you at 1981 because 1981 covered 8.9 all the way up to 11%. And finally, the year-over-year core, which is becoming much more important to the Fed, up 5.9, also higher than expected. However, the high water mark there was 6.5. That was in March. That was the highest since 1982. Our last look, of course, was up 6%. So even though we're hotter than the 5.7 expected, that's the one area out of all these releases that actually cooled versus its sequential comp, which was 6%. The aftermath of this, we see that interest rates actually have moved back up. Shocking. We're now over 3% on a 10-year, and we're at 3.16 on a 2-year. And in my opinion, the most important statement stated about inflation lately was Fed Governor Waller, who basically said, all we really need is for inflation and prices to stop going up, the rate of change. And we've talked about this, which in my mind says that the political costs of inflation are going to end up being much higher than the Fed's financial costs. Because once it stops going up.
All right, so the number was 1.3% month over month for everybody who missed it. And on a year-over-year basis, we're sitting at well over 9%. 9.1% is where we are. So 1.3% was the month over month change. That is brutal. So we got the 1.3% increase in the month of June, and core was up a little bit over 70 basis points, so 0.7%. So even though, so remember last CPI report, we talked about how there is a divergence playing through, right? So I don't know if you guys remember, but go back to our last CPI reading. We talked about this divergence, right? So I don't know how many of you remember that, but even I think in my yesterday's video, I mentioned how there is going to be this gap that's kind of widening out, right? So that's between the total and the core. That's widening out. And the reason why that's happening is because the Fed has little to no control over energy and food prices. That's the biggest problem there. And then discretionary spending, which is excluding food and energy, so core CPI, that is moving down. So on a year-over-year basis, this number is actually showing signs of improvement, whereas headline continues to go up. So we're continuing to see this gap widen out. And back in February, this was much lower, and the spread's starting to get bigger and bigger for total versus core. And on a month-over-month basis, once again, I mean, take a look at energy. June, 10.4%. Like, are you kidding me? Like, look at this, 10.4 and 11.2% for energy, commodities, and gasoline, all types. And on a year-over-year basis, now it's up over just an insane amount, 41%, 60%, 59%. Energy services have more than fuel oil. Fuel oil has almost doubled to 98.5%. Then we got utility, gas service. So, utility piped, which is what we use to cook food, up 8.2% in the month of June. 38% year over year. And everything else seems shelter, 0.6%, so also pushing up a little bit higher. New vehicles were only up 70 basis points. Used car trucks up 1.6% once again, but then food up 1% on a month-over-month basis. So it was across the board, inflation pushing up. And, flick fixings was at 8.9%. We actually came in at 9.1. So that is brutal. Only 17% people actually expected a number to be above 9% in this poll. Props to you guys. You called it. But QQQ down over 2% right now. So NASDAQ down 2%, S&P's down 1.5%, the yields pushed up 2%, and the volatility spiked over 4% to 2840. And we've got a lot of individual stocks, no doubt. Look at these drops here. Amazon down 2.3%, Tesla 679 down almost 3%. Nvidia here selling off 2.78%. Apple is down over 2%. AMD is down over 2.7%, and then we got PayPal Holdings down over 2.3% as well. So FANG, large cap tech. Let's take a look at energy. So energy right now, crude and Brent, they're both down, but let's take a look at some individual stocks here pre-market. Occidental is down 89 basis points. Chevron is down 66 basis points, and then ExxonMobil also down 71 basis points. So this inflation number coming in way too hot. And this divergence continues to play out. We're seeing total CPI continue to move higher, core continue to move down. And you know, it's very clear because the Fed, even Jerome Powell has mentioned in his testimony at the Senate that he has no control over the price of gas and groceries, gas and food. He has no control over the prices. Interest rate hikes will not affect prices of gasoline and food, period. All they can do is they can affect the demand. They can moderate demand for non-discretionary items, and some of the more interest-sensitive items is what he's also talked about. So that divergence will continue to play out, unfortunately. So going through the numbers here all the way at the bottom. So airline fares, once again. So what we're looking for is this all the way at the right, May through June. So this is the column that we're focusing on. Food 1%. Again, gasoline, I don't even want to look. I don't even want to look at energy. It's going to piss me off. Airline fares were down slightly 1.8%, but transportation services combined overall were up 2%. And motor vehicle maintenance and repair up 2% on a month-over-month basis. So definitely pushing up here on that front. And then when we take a look at food, which was also something that we were looking at, very important, 2%, 2%, 5%, 2%, and this is all flour, cereals, rice, pasta, everything that we just looked at right over here. These were the main culprits that were up a lot, 1%, 2% on month-over-month basis. Same things, same culprits. They're the only ones that are up. We got cakes, cupcakes. Again, you come back here, cakes, cupcakes, cookies, bakery products, and they're all up. Biscuits, 3%, 4%. Up on a month-over-month basis. Everything else, meats showing signs of progress here again. So if you take a look at these things over here, the ones that are green showing signs of improvement, so they were down, and you come back over here, you look at how many negatives we have. So negative 2%, negative 2.3, negative 1, negative 1.7, negative 1, negative 1.9. So let's just update this chart. Let's see if there's any changes to the expectations here from the market in terms of interest rate hikes. We're still pegged at 87% right now. So still pegged at 87%, 75 basis points, and only 13% expecting 1% hike in the July meeting. So to answer your question, Vitruvio, do you think there will be a hike of 1% next meeting? This is the probability right now. This is the most current probability, and right now we're still seeing an 87% probability for a 75 basis point hike. This might change later, as people kind of digest that report on inflation. But let's just run through this again. Continue to do this. Ice cream products, cheese, fresh whole milk, still up. So let's just take a look. So again, remember, don't forget that we do have these two things, food and energy, making up about 23 to 25%, so a quarter of inflation. Shelter makes up 32%, which we'll also take a look at when we come down. Energy obviously up 11%, 10% month over month, so that's really not slowing down by any means. And then all items as food and energy is up 0.7%, so that's your core CPI up 0.7%. And then let's take a look at shelter here. So shelter was up 0.6% on a month-over-month basis. Up year over year. I think it's up a little bit over 4 or 5%. So that's where we are with inflation. NASDAQ down over 2.3%, brutal. Dow Jones is down over 1%, and S&P down over 1.6%, a lot. So, and of course the bond yield is pushing up 2.5%. Volatility stays above 4.88, so now it's starting to break out. So this is what we were talking about. God. This is why the VIX was so important to keep a close eye on. Last time we had that inflation report, next 3 days, volatility spiked over 47%, and that resulted in the S&P sell-off so much in 3 days. It was down 10%. And once again, we get a high read on inflation. Divergence continues to play out on total versus core. VIX spikes another 4.8%, and a lot of sectors. Like, look at this divergence, right? This is the 1 day chart, seasonal, like all the sector charts, and Ethereum down 5% on the day. Bitcoin's down over 4%. And then we got all these other sectors selling off. XLE, SPY, QQQ, biotech, technology, financials, industrials, healthcare, gold, bonds, staples, utilities, silver. Everything is down in the red. And the two things that spiked away are the volatility and the 10-year yields. Both of them pushing higher. So that's the market for you, folks. Selling off all the way down. Tesla's down 3%. And yes, volatility, Robinson, we looked at. It's up over 4, almost 5%. Let's just do our quick poll. Let's see what people think about the markets today. Let's do red. Very red. And then green. Or we'll also add flat. So let me know what your thoughts are on the poll that we're about to do here. And the market's open in about 45 minutes, so we got plenty of time. But like I said, volatility up 5.5%, pushing past 28.79. So keep a close eye on this. Descending triangle breaking out, and then oil prices also pulling back a little bit. Ethereum starting to break down almost under $1,000 after the report that we got. And then Bitcoin also down almost 2%, coming down to now under 19,000. And then a lot of individual stocks here. So which ones did we have also? We had Nvidia here. We have AMD over here. I'm pretty sure PayPal was on this one. And then Google is on here. Google is down 2.2%. Google also said that they're going to be slowing down on hiring till 2023. And then Tesla over here down over 3%. And then we had Amazon over here down over 2%. And then Apple is also down 2%. Pretty sure we had another stock here. Forgot what it was. So we had Nvidia, AMD, PayPal, Google, Tesla, Amazon, and then one more stock. Yes, so I'm looking at the futures. I mean, you can look at the futures or you can look at the actual indices, the ETFs pre-market. It's pretty much the same thing. I mean, futures are down. Yes, they're all down over here, selling off, and the volatility is also up quite a bit. So, Avi, what is your action plan for today? So, well, the covered. So we've been selling covered calls against our stocks, right? So they will print pretty well today. If the stocks are selling off, they tend to do really well because selling covered calls is a great hedge for your current positions. And at the same time, I would be looking at selling cash secured puts. So I sold a couple ones on AMD, sold another one on Upstart, sold a few more earlier this week, as we have seen a red week. So if this weakness continues, if you do see a lot of selling pressure that continues to come through, then I would be looking at premiums and selling cash secured puts. And when it comes to long-term dollar cost averaging, I've been very clear about that. We've been talking about this on the channel and in our Discord as well. I need to see inflation as a leading indicator, and when that starts showing signs of actual improvement, that's when we can see a more sustained recovery. If you don't see that, then unfortunately nothing's changed. And today's report is anything but any signs of improvement. On a core basis, yes, it's definitely showing some signs of improvement here. So it came down on a year-over-year basis, but month-over-month still up 0.7%. That's pretty aggressive. But on a total CPI basis, unfortunately, we're in a situation where gas prices are just going up 10% per month, and it's like a normal thing now. gasoline, like fuel oil, up 10%, 12%. It's pretty normal, which it shouldn't be the case. It's pretty crazy that every single month, energy prices are just going up 10%, 10%, 10%. It's just ridiculous. So, well, it came above all the estimates, right? Inflation fixings were at 8.9%. Economists were at 8.8%. Dow Jones estimate was 8.7%. Came in at 9.1. 9.1. I want to see how gold is doing to all of this. So gold is down almost 1%. It has been selling off, right? So from highs of $2,000, it's down 17%. And silver also just been selling off, right? From highs of 26.6 down almost 30%. So SQQQ is up over 7.5%. So the inverse levered ETF definitely pushing higher very nicely, up over 7% on this news. Yep, so PPI is going to be also very, very important, PPI indicator. We're also going to be paying attention to that. So the thing with PPI is that if CPI was this hot and the PPI also comes in very, very hot, that simply means that, okay, these costs are being translated over to the consumer, right? All the costs, the raw material costs that businesses are paying, that's being transferred over to the consumers, because PPI tells us what manufacturers are paying for raw materials, and consumer price index tells us what consumers are paying for finished goods. So if they're both up pretty dramatically, they're both up very, very hot, that means businesses are actually transferring over that cost over to the consumer. But if PPI shows us tomorrow that, okay, prices are cooling off a little bit, they're not going up as much, and the consumer price index is still higher, that means that businesses are obviously not lowering their price for the consumer. They're still keeping them very, very high. So good morning, evening from Shanghai, in lockdown again. So that could, yeah, I just read up on that as well. Tesla could be hurting from that as well, with Shanghai under lockdown once again. So, okay, how many people actually believe that CPI has peaked? Because I'm seeing a lot of comments about CPI peaking. So let's just do a quick poll on that as well. I'm going to end the market poll, and I want to hear what everybody has to say. By the way, 61% of you expecting the markets to be very red. It's not a surprise because we are really, really brutal for the markets right now. So simple yes, no question. Has CPI peaked? Has inflation peaked? Let's just say that. Alex, yes, I will be here till market open. Yeah, so I will be here for another hour or so, more than an hour. Hopefully my battery allows for it. But yeah, lots of stocks is selling off quite a bit. I think it's across the board. You're seeing TLT, the bond ETF, also selling off. Individual sectors pulling back right back down, and the only things that are up are volatility in the 10-year yields, as I pointed out earlier. And you'll notice this big divergence, right? Right after the inflation numbers came out over here, two things just skyrocketed and everything else just went down, all the way down. So did the poll go out? Okay, wait. There we go. All right, so now I'm going to answer some questions here for all of you. So if you have any questions about any stocks you want me to look into, anything you want to ask in specific about company fundamentals, I'm happy to go over that because we got a lot of time to kill until market opens. And this is what this live stream is all about. It's for you guys, for you to ask any questions about any companies and any sort of support resistance levels you want me to track down or give you my perspective on individual companies. I did a video on Chipotle earlier, so I know it's been long overdue. I don't think I've ever done a video on Chipotle, so wanted to go over the fundamental analysis, the entire technicals, the earnings, cash flows, everything is in that video if you want to get a good understanding on whether Chipotle stock is a buy at these prices or not. So make sure that you do check that out if you haven't already. And I will be posting more and more stock analysis for you. I promise that. And so far we've covered public storage recently. We've talked about Chipotle and then a couple other stocks that I covered in my yesterday's video as well. So okay, so let's talk about Unity Software. I heard that they are buying a new company. They are in the process of acquiring another company. I forgot what the name was, but I'm pretty sure they are. Okay, so Iron Source to merge with Unity Software in a $4.4 billion all-stock deal. Now, I'm not too familiar with Iron Source, not really sure what the company does. But on Wednesday, they agreed to merge in all-stock transaction that values the Israeli system software company about $4.4 billion. And under the terms, each share of Iron Source will be exchanged for 0.1089 shares of Unity, which will own 73.5% of the combined company, and the remaining 26.5% stake will be held by Iron Source shareholders. So the market seems to not like this deal. There's some inflation priced in as well with Unity Software down 16%. But I looked at this stock earlier when this deal was announced prior to inflation numbers coming out, and this was already down, I think 7 or 8%. So my expectation is the market's not liking this deal kind of going forward. So right now we're keeping a close eye at this support at around $32.50, $32 a share. So that right there is going to be the level to watch. And right now just consolidating sideways in that range of higher highs and higher lows. So $32.50, $32 is going to be that support level to watch for Unity Software. So, all right, let's take a look at Boeing. What is Boeing doing? What is Boeing up to right now? They, I think, report earnings later this month. So July 27th is when they're going to be reporting earnings. Yesterday they were up 7% very nicely, and pre-market slightly down about 1.4%. I've done videos on Boeing as well, so if you want to get a good understanding on the business, the company, what my fair value and all that stuff is, make sure that you do check out that video if you want a more detailed analysis on the company. But overall, next resistance at 186. So that is going to be the level to watch for Boeing. And support level right now is going to stay put at 144, 145 for the company. I think Delta reported some good numbers, so they were expected to report pre-market, but they're also down 6% here. Let's take a look. Okay, so they did miss on earnings and revenue. Let's see. So swings to a Q2 adjusted profit as revenue surges and company offers Q3 revenue outlook. So they reported $1.44 in diluted EPS versus a loss of $1.07 a year earlier, and an EPS of $2.35 in 2019. Analysts were expecting 172, so they came in shy of estimates. And operating revenue for the quarter was $13.82 billion versus $7.13 billion same time last year. That's a very strong growth. It's 100% growth year over year. And $12.54 billion in second quarter 2019. So the reason why we're comparing with the second quarter 2019 is because we want to see that pre-pandemic revenue and how far into the recovery the companies are, especially the airline ones. And revenue is actually much higher than the actual revenue that was back in 2019. Now, there's a couple different reasons why that might be. First of all, obviously, we've seen a big recovery, right? So pandemic's starting to come to an end, and people are flying, and there's a summer season, so obviously people are booking a lot of tickets. And at the same time, prices, airline fares have actually gone up quite a bit. So that even though fewer people may be flying because of everything that's going on, they might be paying higher prices for the tickets, and as a result, that's resulting in a higher revenue. And for the third quarter, they said the capacity to fall between 15 to 17% compared with the same period last year, and total revenue in the range of increasing 1 to 5% versus Q3 of 2019. So right now down close to 6% at the moment. Okay. So do you trade more equities or options? More options is what I trade, but for stocks in general, mostly long-term focus. So we're investing for the long term. We're looking at companies with 3 years, 5 years, 7 years time horizon, trying to understand their fair value. And then, of course, looking at the entire business, so the revenue, the earnings, the cash flows, the balance sheet, and then figuring out the fair value and then investing for the long term while also trading options for passive income. Very, very safe option strategy. So we're not buying naked calls or puts, and we're not day trading options, but we're simply just using very, very conservative strategies to hedge the portfolios in sort of like markets like today when stocks are down like 2-3% on the day. Covered calls will be doing much better. So that's primarily is what we're doing. So, okay. So the question is, which sectors do you think has nothing to do with today's inflation report? And if you see unjustified selling based on today and tomorrow, it would be an opportunity. So yeah, I think that's a fair point. So basically what you're asking is which sectors are not affected by inflation at all. So, I mean, prices going up is affecting consumer demand across the board, right? It's going to affect everything. Energy prices going up, staying higher, it's kind of like a necessity, right? People still need to buy gas, people still need to buy groceries. Those are your necessities, right? You can't not buy those things. So I feel like those sectors, so like staples, energy, they're obviously going down on this inflation report. But energy is going down for different reasons because oil prices are kind of cooling off and the valuations have just gotten too out of hand. So I don't personally see a lot of risk reward potential here for energy, even though it's pushed up quite a bit. And Warren Buffett keeps buying Occidental every single week, like he's just plowing in more money into this company. But the risk reward really isn't for me at these prices for energy. Staples have their own issue with inventories, right? So they've already talked about how they're gonna lower their prices. They're gonna give heavy discounts to customers so that they can get rid of their stock and their inventories. So that's another problem for them. Even though staples tend to be very recession proof, they're dealing with a whole different bunch of issues when it comes to inventories and lower prices. So, that's the situation that we're in right now, is that most sectors and most parts of the economy are hurting when inflation is this high. So apparently, I mean, imports should start to get cheaper with the euro getting to where it is now. So that should start helping inflation to some extent as the US starts importing goods from Europe, from the Eurozone, and they will become cheaper as the euro continues to depreciate against the US dollar. So that might be a tailwind for inflation. That might benefit inflation coming down, but only time will tell. All we can do is just wait and see where the data leads us overall. So since the future market have dumped a lot, do you think that the markets could pump from here? It's well, it really depends on where those interest rate expectations will be. I mean, if it's 1%, which I do think that this number could start to go up more, like we could see, an uptick in the 1% expectation from the Federal Reserve, then I think that would be a pretty big surprise for the markets and leaves us very little room to actually rally for the day. So we'll just wait until this loads. But seriously, what a print. What a print. Crazy print on the CPI. Sometimes this freaking computer and this website just doesn't load. All right, I'll just have to update you guys at a later point, but this is the CPI number, the S&P 500 numbers, not the CPI numbers, S&P 500 numbers, and this is the sensitivity grid that we're tracking on a forward basis, 2022 basis, and 2023 basis. Right now, we're sitting at 17 times earnings for the S&P. Where did S&P close yesterday? At 3,800, so we can bring this down to 3,800. Oh, this is a different one. So I'm actually logged in the different account. So yeah, right now we're sitting at 17 times earnings for the S&P 500. So if earnings start coming down, then unfortunately that might leave more room to the downside for the overall market. Okay, so we got about 30 minutes left for the markets to open. So okay, 53% people expect, or at least estimate, that the CPI numbers have indeed peaked. And 47% expecting it has not. So we got over 600 people watching this stream. I want more votes so that we can get a more comprehensive data set So make sure that you vote if you haven't already, and tell us what you believe have CPI numbers peaked. Because in the inflation fixings, they were saying that on a year-over-year basis, June number at 8.9% was the highest, and then it was going to come down to 8.8, 8.6, 8.5, and then after October is going to come down. So if June numbers came in at 9.1, then obviously what are those next inflation fixings looking like, right? What is going to be for the July, October, and August, September, October levels? So volatility is still up 4.5%. The spreads, let's take a look. So this one has just been fallen off a cliff. So recession fears have only gotten worse over the last several months here. And this thing is down over 78%. So the 10-year versus the 2-year spread that we look at, or in other words, the yield curves, if you want to look at that one, is down to negative 15 basis points. So now you're in a situation which is a very bizarre type of market in the bond market, where the 2-year yield is yielding you more return than the 10-year yield. So if you lock up your money for 2 years with the government, with the U.S. government, that's going to pay you more return than if you were to lock it up for 10 years. So that's the crazy concept around yields, and right now they've flipped, right? So spreads are negative, and it's negative 15 basis points. So fully pricing in for a potential recession here. So, yeah, I feel like everybody's just a little shell-shocked with inflation numbers. It's like there's not really been much chat or talks in the live chat here, but so don't forget we had a great jobs report, so we're not doomed yet. That's actually that's the worst thing that could happen in the market from the market standpoint, you know, because a strong labor market and a high inflation only means, what does that mean, everybody? I'm sure you can put the pieces of like puzzles together. What does that mean? A strong labor market like we got last Friday, where we added over 300,000 jobs, unemployment is at 3.6%, and on top of that, if you pile up an inflation number that's 9.1%, what does that mean? What does that mean from like a market standpoint, market perspective, and Fed tightening, yeah. So Fed tightening, Fed is gonna be more aggressive, right? So interest rates expectations, yep. So increase in rate hikes more, absolutely. Jose, Florent, you all right? So aggressive Fed. Had it been a very poor jobs report and unemployment kind of ticking higher, then the Fed would have really had to think twice before doing what they're planning to do. But now we're in a situation that, okay, unemployment's strong, inflation's high, do the 1%. Who cares? Do the 1%, right? It's just like that type of situation. So, yeah, more aggressive Fed means more rate hikes. So that's where we are. That's a very interesting situation in the overall economy, right? So, and that's what happens, you know, when you've got so many mixed signals, right? The bond market, for the first time, I mean, the bond market is actually going to be dropping on a year for the first time in a very long time, in like hundreds of years. I think since the 1865, if I'm not mistaken, it was the last time, 1865, the bond market actually was dropping this much, right? Over 20% down. And then you've got recession fears, yes, no, all over the place. Unemployment super strong, but still recession fears. Inflation super high. The it's like, it's hard to put all these pieces together, because the economy obviously is so complex that, yeah, it's just a really complex thing. So AAPP, yeah, employment and CPI lag data. Yeah, I mean, everything really is just a lagging indicator for us, right? We obviously don't know what the future is going to be. The only indicators we've got, the yield curves that predict, to some extent, recession fears. We've got the volatility. So those are some of the leading indicators that we can look at and what the market's pricing in. but most stuff that decisions are based off of and what the Fed is making their decisions off of is lagging indicators such as inflation and unemployment and GDP numbers. So they're very data dependent. So they are going to be waiting for these numbers before they make their decision. So we'll see. I mean, things have been a little bit choppy, and that's one of the reasons why when it comes to sort of like long-term dollar cost averaging and sort of like buying the dip, you have to be very careful going into these technical rallies. And that's why our focus has been more towards options trading and hedging and generating a passive income, as opposed to just like constantly buying, and the market's just selling. So it's just a little bit of a pivot. Obviously, when we start to see things improve on an inflation front, and interest rates go up to 3.5%, because that's where they're priced for. God, I wish this was working right now. I don't know why this is not working. Let me see if I can open it up on Chrome, because I want to show you all what the actual expectations are from the market for this year for interest rates. Okay, now it's gonna work out. So, oh, there we go. Maybe it was too much activity. There we go. Right now, this number dropped down from 85% down to 58.4%, right? So the probability is completely shifted. Now it's pretty much break even, 50-50 almost. And 41% expecting from Fed funds futures that interest rates are going to go up to 1%. Like 1% hike is what we're going to see in the July meeting. So this is what we were waiting for. We talked about this earlier, and we looked at this number earlier. It was at 88%, 85%, and dramatic drop down here. And then this number obviously pushing back up, 41%. So 1% would be crazy for the Fed funds futures. Let's see what the probabilities are for rest of this year. So we're still pretty pegged for 3.5 to as much as 3.75%. So even though this number is obviously changed for the July meeting, July 27th, from about 85 to 58% and 41% now projecting a 1% hike. The overall on a year basis, we're still pretty pegged at 3.5 to 3.75%. And that is true after November. So the market is expecting in November that we're going to get a 50 basis point hike. So right now, what the market's pricing in is a 58% probability for a 75 basis point and a 41% probability for 1%. And then in the September meeting, 51% probability, so majority projecting either a 75 basis points or a 50 basis point hike. And then in November meeting, it's pricing in a 50 basis point hike. That's it. And then 50 basis points, and then we're steady at those levels. 3.5 to 3.75%. Once we get there, we are steady for the next several meetings, according to the markets. And that's when we could start to see a little bit of a pivot. But yeah, that's where we are. And we definitely did shift quite a bit. Okay, so when Twitter is green, let's take a look at Twitter. Twitter is green, 1.47%, pushing higher. And of course, all the other stocks are down. Tesla is down almost 3%, so 678 is where we are. Market's still not able to recover at all. But this right here was the overall, the complaint that was filed with the state of Delaware from Twitter against Elon Musk. And of course, you can read this. It's a pretty long document. There's a lot of things included here. So I'll share the link in our Discord if somebody's interested. But yeah. And I was listening in earlier from one of the professors at law schools. And they did talk about that in the past, every time we have seen companies buying another companies, so kind of going through that merger agreement, kind of back out. Oftentimes, not always, but oftentimes it's the companies backing out of the merger agreement have lost that suit. So in other words, the companies, in this case, Twitter certainly has a much bigger hand when it comes to this merger agreement, because it was a binding agreement that was signed and agreed upon from both parties. So that's definitely a bit of a problem for not just Elon Musk, but Tesla as well, because if the worst case scenario happens is if Tesla, like Elon Musk, is forced to buy Twitter for $44 billion, and the financing is still airtight, right? So he's secured the debt, he has the equity, he's also got Tesla collateral margin loan facility, $12.5 billion. That will be a bit of a problem, because again, Tesla shares kept aside as collateral can be a problem to Tesla's market cap and of course the stock itself. So we'll continue to kind of monitor this and see what happens. This is going to be a long litigation process where it's going to probably take months. So, okay, I'm going to end this poll as well. And we're going to do our final poll for the day. 20 minutes till market open, but we're going to do our final poll for the day. And that is going to be... Okay, this is not it. This was just nothing. Accidentally clicked the button. So the final poll for the day is simply going to be the Fed rate hike. Fed hikes rates by, and let me know what you all think, 50 basis points, 75 basis points, 1%. I'll just do 100 basis points so that it's pretty consistent, or 125. That's 1.25%. Okay, so only the weird stocks are going to be green today. Yeah, I mean, I feel like entire market is down. We can just quickly run through some of the names here. But let's take a look at ARK. Let's see how ARK is doing right now. Yeah, so DeMarco, I've actually done a video on Salesforce. My fair value is actually really, really low for Salesforce CRM. So, Anonymous, what happened? You're saying no? For what? And ServiceNow is a stock that I will be analyzing. I'll do a separate video on them very soon. So we will do like a complete dedicated fundamental technical analysis video on them very soon. So ARKK is down over 3.3% right now. ARKG down over 3%. ARKW 4.7%. This is next generation internet ETF. And ARKF financials down over 2.3% also. Let's take a look at some of the staple stocks. So retailers, let's see how they're doing. Charles, was Elon's offer conditional upon completion of due diligence? Of course it was. I don't think it was. I mean, everything that I've read about it, it says that he did waive due diligence. Even in this complaint, they actually mentioned that. So we'll see what happens here. But Kroger down a little bit over. Well, Kroger's flat. Dollar General here over 62 basis points. Amazon down 1.7. So Staples seems to be kind of holding up a little bit better, but Costco's still down close to 1%. Target is down 1%. We got Macy's down over 1%. BJ's up, so 0.9%, pushing higher. You know, Home Depot up down 1%. Walmart is also down about 0.5%. So Staples obviously not as aggressive as some of the other stocks out there. CVS, Lowe's. Next stock I'm going to analyze is actually going to be Lowe's, because this is another one that looks interesting. Has a pretty good dividend yield, has been sold off quite a bit, and very nice consistent revenue and earnings. So this is going to be a company that I will analyze tomorrow, and we'll post that video. Full fundamental technical analysis on this also will be included. And then Walgreens is slightly down about 0.71%. So retailers, not as much in pain as the other parts of the market. And then let's take a look at cybersecurity. So Ping, Zscaler down 2.6%, Crowd is down 2.25%, Okta almost 4%, and Palo Alto Networks and Fortinet also down 1 to 2% here pre-market. XBI is dropping, yeah. So XBI, I think yesterday was a green day for XBI. So it was at 1.4%. But right now it's down a little bit over 1.65%. So, yeah, biotech pulling back a little bit. Yesterday kind of sold off all the way down to $78, $79. And then got bought up very, very quickly, right, to close well above $81. So all right, so let's take a look at ALGN. Align Technology. So down to $243. Market cap's now 19, almost 20 billion. Revenue growth has been very strong. Quarter over quarter, very stable revenues. Earnings about 13, 14, 15%. Year to date down 62%. That's pretty aggressive there. And let's see. So from their pandemic lows, they're up a little bit over 90%, but from their pre-pandemic highs, they're actually down about 18% right now. Oversold absolutely on the weekly chart. RSI, MACD, they both are. So we got little to no dilution. That's great. Price to earnings is 28, and price to cash flow at 20. Price to sales at 5. Enterprise value to EBITDA at over 17. So a little bit of rich multiples there. Just compared to the market that we're in. And then gross margin 73%. That's good. Net margins 13, almost 14%. So for a technology company, net margins are actually quite low. So you see gross margins 73% and then operating margins 20%. Immediately that should click that, okay, they're spending too much on operating expenses. They've got pretty big expense related to sales and marketing, general administrative expenses, research and development, whatever that comes into that operating expense budget is pretty high because they're spending half of their revenue on operating expenses. So that's very, very high. Current ratio 1.3, that's good. Quick ratio 1.18. Little to no dilution, as I said earlier. Valuation is a little bit rich, but take a look at their balance sheet very quickly. Cash to total debt, so that's also good. Cash sitting well over 1 billion. Little to no debt, and definitely has been sold off quite a bit. So technically oversold. So might be a good trade opportunity here for Align Technology, given how oversold it really is at the moment. So support level 223, 224. We have seen some bounces off of these levels, and the level below that we're going to be watching is going to be around here, 176, 175. Okay, so what about MJ stocks? So let's take a look at TrueLeaf. That's the only MJ stock that I'm really watching right now. And of course, it's just been on a consistent downtrend for the entire market. It's been selling off as well from $51 down to $11. Market cap's come down to about 2 billion. But very strong, consistent revenue growth. Earnings have obviously come down, taken a hit because of their acquisition and the merger that they did. So quarter over quarter, they're seeing a little bit of pullback in earnings, but revenue growth has been very strong for the company. And this is the only stock that I'm really interested in when it comes to the MJ, right? So that's going to be TrueLeaf Cannabis. All right, so we got about 10 minutes left for markets to open, and nothing is looking very pretty. We've got the S&P, NASDAQ, Dow all down. The yields are pushing up a little bit, 1.85%. And then volatility spiking, still up 4%. And a lot of individual sectors are still down on the day. So all of them. And this is still pretty pegged for closer to 1%. Oh, I love this comment. I'm definitely going to pin this comment right now from Kevin. I'm putting a bounty out on the red mic, want it dead or alive. The real question is, Kevin, how much bounty are you putting on it? How much? How much are we talking here? So, this thing stops working for me, you know? This thing has been giving me so many issues recently. During our live stream, during my recordings, it just stops working, which has been a big problem. So, I'm gonna have to find a new microphone, I guess. I'll find something that's even more red, something that really brings the red out, you know, like deeper red than something like this one. So, but Kevin, let the viewers know, man, how much are you putting up to get this microphone dead or alive? I feel like it's in its last stages, right? It's like just giving up. 3 AMD shares. I love it. Love it. So that's almost $225, folks, right there. Kevin for you. Putting up. But yeah, no, we're gonna make that switch soon. Like I said, just waiting for the inflation numbers, and they need to show some improvement. If they don't, then, well, guess what? The red mic is gonna strike again. And here we are with the markets down. So, Kevin, why do you hate us? I of course don't hate us, man. I'm just kidding. We're kidding. I love you all. So, come on. We just have some fun here with the red mic. And I also created a new emoji in our Discord for the red mic. So if you want to actually react to any of the messages with a red mic, now you can. No more red mic syndrome. It's already a sea of blood since the red mic's arrival in this channel. That's so true. Since I got this, it's just been nothing but red in the markets. It's a crazy coincidence in 2022. So Caterpillar, yes, I'll be doing a video on Caterpillar as well. This is part of the list to do fundamental analysis, and right now sitting at support at 172. So this right here is going to be that support level to pay attention to. 2.75% dividend yield. That's a very strong dividend. Overall revenue earnings have been nothing but strong for Caterpillar. And very consistent as well. So we'll keep a close eye on Caterpillar. Right now support at 172, and I'll be doing a video on Caterpillar in a lot more detail as well. Richard says you should sell your red mic to Michael Burry. Can you even imagine the amount of damage that guy can do with the red mic? It's just him. It's just giving him like a superpower or something with the red mic. All his comments are gonna come off of the red mic. Like, you got a bear with the red mic, the markets are done. They're over. Anonymous, I will be watching all of your videos. When you change your mic, I will deploy all the cash to buy. That's great. That's what we want, right? That's what we need to see, is that when we make that switch, at least we will be in that sort of mindset. Okay, green mic's here, and now it's gonna bring us some gains, and it's time to actually be a little bit more of an aggressive buyer. And that's the plan. That's the plan that I'm actually following up with, right? If I have the red mic, that means I'm not really aggressive in this market right now. We can see technical rallies, absolutely, but for us to see a more sustained recovery, the green mic has to come out, right? So, and that means inflation needs to pull back a little bit. So, watch your video on VOG. Is it equivalent to VOOG? Let me take a look at VOOG here. So, it looks like it is, yes. So, Vanguard S&P 500 Growth ETF. I'm pretty positive that it's going to be the same thing, but you may want to check on ETF.com to see if the holdings, the allocations, the expense ratio, everything is the same or not. I mean, I've just laid over the actual VUG versus VOOG, and it seems like it's followed the same path, almost identical path, right? So you can see how they've both been kind of following each other, right? So VUG over here at the top in blue, every single move, every single like turn, down, up, down, everything has been very similar. Look at this, up and down together. So from a technical standpoint, they do seem to be moving in almost the same direction. But check on ETF.com to see if they're actually weighted the same way and if they've got the same expense ratio and all that stuff. So I think that would be a much better estimate as to if there's any difference. Another way you can look at it is VUG versus VOOG. So seems like there is some difference, there. So right now this index is at 1.03. For every time you're looking at a correlation of two things, if that number is sitting exactly at 1, that means they are they've got little to no, like they're pretty much the same thing, right? They're not gonna be moving in inverse to each other or in that same direction. So this right here, you'll notice that since January of 2018 till this February of 2021, VUG seemed to have outperformed by 12% relative to VOOG. So it does seem like the weighting is different, right? So the weighting might be different for certain stocks, and as a result, VUG kind of had that outperformance. But now, since the start of this year, VUG is underperforming relative to VOOG. So that might once again be because of the weighting that might be different for those two ETFs. Let's take a look at InMode. Yeah, so there is no FOMC meeting in August, so the Fed can't flip until September. Earlier is going to be a long summer. Yes, it will be a pretty long summer. Absolutely. So InMode had a very strong day yesterday, pulling back. It's pretty obvious after having a very strong day with inflation coming out, it's down almost 3%. So, coming down under $26. So the 50 EMA is going to be the one to watch. It's sitting at 25.61. So we'll see if we actually have any buyers step in at that 50 EMA. That's going to be the yellow line you see on the chart. InMode loves to sandbag investors all the time. They come out with some very, very low, abysmal earnings estimates. And then 2 weeks, 3 weeks prior to the actual earnings report, they come out and they raise guidance. And they say, okay, you know what? We're going to actually do more revenues and earnings. And the stock kind of rallies. And that's happened time and time again. I mean, prior to earnings, you'll notice over here, we had these big spikes going higher. I think it's happened in the past as well over here. Many times it's happened. Like in last year too, I mean, InMode rallied all the way up because the company came out and said that they're going to do much better than they're previously anticipated. So InMode down 2.84%. 50 EMA is going to be the one to watch at 25.61. So we got about 3 minutes left to market open here. The battery is still doing good. We can put in another 15, 20, 25 minutes. Screw College upgrades, downgrades. So yes, we haven't taken a look at that. Let me see if I can actually find it somehow. On CNBC, let's take a look here. U.S. inflation rose 9.1% in June, even more than expected as price pressures intensify. And let's take a look at upgrades and downgrades here. Okay. So this is where we are for upgrades and downgrades. So KeyBank initiates Lyft and Uber as equal weight. We got Goldman Sachs upgrading Armstrong World Industries to buy from neutral. Wells Fargo initiates Gartner as overweight. We got Citi initiating Taiwan Semiconductor as a buy. So TSMC getting a little bit of a buy rating. Arista Networks gets a buy rating from Rosenblatt Securities. KeyBank downgrades Caesars and SeaWorld to sector weight from overweight. And then Bard initiates Snowflake as outperform. Wells Fargo downgrades Synchrony Financial to equal weight from overweight. Citi downgrades Freeport. Citi reiterates Apple as a buy, but lowered their price target down to $175 from $200. So buy rating, but lowering their price target. Goldman Sachs reiterates Netflix as a sell. Deutsche Bank downgrades Dave & Buster's to hold from buy. And then Canaccord reiterates Tesla as a buy. And then finally, Raymond James initiating Bed Bath & Body Works as strong buy. And then Clorox getting an outperform rating from Raymond James. Piper Sandler reiterates Twitter as neutral, lowered the price target down. They actually had a price target to $54.20. We make no changes to estimates, but we reset our target price from $54.20 down to $30 and reiterate our neutral rating. What? Like how? Okay, so markets are about to open. So Amazon gets an overweight rating, DigitalOcean sell rating, and then downgrade on Gap, reiterate on Microsoft, Robinhood as a buy. Wow, lots of upgrades and downgrades today. Anyway, so we got about 2 seconds left for markets to open. Here we go. And off we go. We got about 75 basis points expectations from 54% of you. So over half of people expecting 75 basis points, and 37% expecting that the Fed is going to raise rates by 1 full percentage point. NASDAQ opening down, of course, down over 1.8%. The Dow opening down 1.2%. And the S&P 500 also opening down 1.3%. The yields are still higher. And Google down 1.4%. PayPal down 2.5%. We've got AMD down over 1.6%. Nvidia is down over 3%. Apple down almost 2%. And then we got over here, there might be a little bit of a different stock. Amazon down 2%, and then Tesla also down 2.5% right now. So almost all of them just pulling back. Oh, Meta. Forgot to put Meta on there. Down 1.2%. So the entire watch list is nothing but bloody. Unity Software down the most, down over 12%. And then we've got some of the other names, obviously down Upstart, Coinbase, Cloudflare, Marathon, LABU, Square, Fubo, Roblox, DraftKings, Shopify, everything is just straight up down. Palantir, Neo, 1.5%, 3%, 4%. The list goes on. And we are down, yeah. So the only stock that's up is Twitter. Twitter is up 3.3%. That's the only name that's pushing higher in our main watch list. In our Chinese stocks, all of them down. All of them selling off right at the open. XPeng, Li Auto, Alibaba, Neo. Then we got Tencent, Baidu, selling right back down. Cybersecurity, all of them down. Energy. Energy is somewhat back and forth, right? Occidental's up almost 0.5%. Devon Energy also up 83 basis points. We got electric vehicles. Yep, complete bloodbath. Electric vehicles, all of them down. And then fintech here, also selling off. Affirm's down almost 7%. SoFi is down over 3%. Upstart's down over 4%. Square 3.7%. PayPal down 3%. Visa, MasterCard also selling off quite a bit. So another one of those days. And then semis, all semis down. Nvidia leading the losses, down 3.7%, followed by AMD, Texas Instruments, Qualcomm, Intel, TSMC, and of course retailers. So the ones that are doing well, Dollar General and Kroger's. So we're making a new low of day. Nasdaq's down almost 2% here, and the S&P also down over 1.5%. The Dow is kind of holding up much better. And volatility here is up over 5.5%. There we go. We're getting the spike that we were looking for. Because the VIX was an important indicator going into this inflation reading, and we talked about how these are very critical levels, almost exactly. When it's like textbook, exactly at these levels we spiked in June after the inflation numbers. Kevin says, I have 1 million alerts going off right now. Yeah, so do I. I mean, it's just like complete, so many alerts here just going off right here. There we go. Now we're up to date. But yeah, lots of stocks here just selling right back down. Let's take a look at cryptos. Bitcoin's now just a little bit over 19,000. Ethereum's just barely above $1,000. So they're both selling off quite a bit, and of course a lot of crypto mining stocks and a lot of individual companies, miners, and crypto exchanges, all of them down 5 to 6%. Vertex staying strong. Vertex is doing really well. We talked about it in our Discord. And even yesterday, Vertex up 1%. Look at that. Very, very strong move for this company. And year to date, it's up over 31%. So Vertex definitely has done very well over the last 6 months or so. And since pretty much November, right? When the markets peaked, right? Since pretty much this is November of 2021 we're talking about. And markets peaked exactly at these times, right? November of 21. You go back, you look at the chart, November was the peak for the markets, and Vertex since then has gone up 65%. So the relative performance is going to be insane. Like Vertex has destroyed the S&P 500 in the last 8 months. You look at that relative performance chart, look at that. Look at that beauty since November. 102% outperformance from Vertex. Insane. Incredible gains for Vertex. And of course, it's only one time period overall. I mean, in the past, it has underperformed significantly since May of 2020. It was just selling off. But this right here has been incredible. Incredible outperformance. So that's where we are, hitting a new low of day. Well, we were, but still above 11,000. And the NASDAQ here, let's take a look at the 200 SMA. We're still somehow able to stay above that 200 SMA. It's crazy. It's crazy how the NASDAQ is still holding on. Look at how volatile the last 4 weeks have been for the markets. Even the last 6 weeks. Up 6%. Down 5.6%, up 7%, down 4%, up 4%, down 5%. this has been such a volatile market in the last 6 weeks alone. It's been crazy. Crazy, crazy, crazy. So much back and forth. Like green, red, red, green, red, green, red. It's just... What is Vertex, bro? So Vertex is a company in the biotech industry, biotech sector. They have been one of the positions that we were buying, obviously, last year. I exited my position in April in the 280s, but of course, not super price away from where it's trading right now, 293. I exited around here back in March and April. But yeah, it's been a biotech company, very, very strong in terms of revenue growth, earnings growth. They've got a few drugs out there, Trikafta, that bring the big bucks for this company, revenue wise, and they've just been very, very good quality name in terms of the balance sheet, the actual revenue growth, earnings growth, and all that stuff. So very high quality name that has done really well. So yeah, swing trader's dream it's been for the last 6 weeks or so. So we got NVIDIA. Let's just go to our FANG Mint and see where we are with those names. Okay, so Microsoft down 1.3%. Microsoft was down over 4% yesterday. Very, very significant sell-off. It was the only name that was down, like in the FANG stocks that were down like over 4%. Apple, Meta down 1.5%, almost 2% each. AMD, Amazon down almost 2%. Google, Tesla, Netflix are all down at least 2%, and NVIDIA is down over 3.5%. So lots of selling pressure coming in. And of course, Unity Software is still the one that's down the most. And then some of the crypto names, Upstart, Roblox, Shopify, Peloton, Fiverr, some of the more small cap names selling right back down. All right, everyone. So that's going to be it from me. This has been a very, very exciting, very interesting live stream. So yes, so Oscar, I'll definitely alert everybody in our Discord when I do end up buying a little bit more aggressively. I've been still dollar cost averaging very, very smaller quantities, but obviously not as aggressive as I'd like to be, but mostly been trading options for the most part. So yes, I'll alert everybody in our Discord. So thank you so much, you guys, for joining in. It's been fun over the last an hour and a half, almost 2 hours. So inflation obviously coming in much higher than expectations, 9.1% for total. Core is coming down to 5.9. So we're continuing to see that divergence play through, as we talked about in our previous live streams and previous CPI report and our yesterday's video as well. So look out for that divergence, which might happen or which might continue to happen for inflation. So thank you so much. And this is where we are for the actual numbers when it comes to the Fed funds. 58% still expecting a 75 basis point hike, and 41% expecting a full 1 percentage point increase during the Fed meeting in July. So thank you so much. Happy investing. Make sure that you drop a like, subscribe, and also links to our Patreon, Discord. It's going to be down in the description. If you want to join and be a part of our community, I share my trade alerts, options alerts, private videos, tutorials, and fundamental technical analysis. All that stuff is going to be included, plus our Google spreadsheets if you want to access all of them and get a good understanding on S&P 500 sensitivity grid. We've got an inflation tracker, recession tracker, and valuations overall as well. So thank you so much for joining. Happy investing. Hope you all have a great day. Tomorrow is going to be PPI numbers, producer price index, same time, 8:30 a.m. Eastern. I won't be live for that, but I will be sharing the numbers in our Discord. So thank you so much. Happy investing. I'll see you guys in the next live stream.